Let me kick off by asking, first of all, what your thoughts are regarding the increase in MPR from 26.25% to 26.75%.
Well, I think this was as a result of the fact that the trajectory on the rise of inflation has not abated. And I think 50 basis points was a cautious increase, just to recognize that. But at the same time, you don't want to go too high because, if increased interest rates also has some adverse impacts on the cost of borrowing. So it's a trade-off. But the beauty about this is the fact that month-on-month inflation, the trajectory seems to be on the decline. So there is a tipping point which the central bank is looking for to find out when they feel that inflation will begin to drop and they can begin to hold rates steady. At the same time, they don't want inflation to go out of control. So I think this is just an increase. It's a marginal increase in recognition of the fact that inflation is still going up.
Well, if you could just help us break it down to make the layman understand. I mean, why increase an interest rate when inflation is on the rise?
Well, the problem with inflation is that inflation does not help anybody. And in order for us to grow our economy, we must have low interest rates. So at the times when interest rates have been between 9 and 12% in Nigeria, our economy has grown over 8%, and that is what is desirable. But with inflation also, then you find out that it affects us all in the sense that our purchasing power is eroded with inflation. Prices are high and we cannot get, for our naira, we can't stretch our naira as we used to before. So you can buy less for every 1 naira that you have. But when you have a low inflationary regime, you can stretch your naira. For each naira you have, you can get more from that. So that is why it is desirable to have a low inflationary environment. And when you have a high inflationary environment, the only way you can reduce it is to be able to tighten money supply and to reduce interest rates. So the classical definition of inflation, which we always see, is too much money chasing too few goods. So you want to reduce the money supply so that you can have some parity within the system and create a conducive environment.
But then how does this trickle down? What would be the impact of these on businesses as well as overall economy of Nigeria?
Trickle down is not, I'm not an advocate of trickle down. My own advocacy is to create an enabling environment. That is, you want a low inflationary environment where inflation is about between 9% and 11%. When you have that kind of environment, or even single-digit inflation, then you will see that the economy itself will thrive, it will grow. There will be more opportunities for everybody and everybody can prosper. And that's my own advocacy. But thinking that you want to do something on top and then everything will benefit, yes, those things are okay. But don't forget that Nigeria's economy, 50% of our economy is in the informal sector. And the informal sector also contributes to 50% of our GDP. And that is where you find over 25 to 30 million SMEs. So it's in Nigeria, that sector is very important. So if we can take care of the macroeconomic situation in Nigeria, our informal sector will thrive. And if the informal sector thrives, then the economy will grow.
Okay, just to follow your line of thought, you talked about pulling down inflation, which is about 34% as it now, to 9 to 11%. How can we create that enabling environment?
Well, the way you create that environment, like I said, is to drop inflation to like 9 to 11%.
How do we do that?
Well, that is what you are trying to do now with the interest rates. They're increasing and they're tightening money supply. You can see the central bank is tightening. They have CRR at about 45%. So they're restricting money supply. But even though they're restricting money supply has hit an all-time high of 100 trillion. So there's still some challenges on the fiscal side. But what will eventually happen is that because we've had a long period, there was a gap for almost 9 months when there was nobody in the central bank. So they didn't touch rates. So inflation went sky high. So right now they're beginning to rein inflation in. So let's wait until about the end of the year. So like I've said, if you can tighten money supply, like I said, too much money chasing too few goods. So you have to reduce the amount of money in circulation so that you can create value. So that is really what you need to do. And once you can do that and you can restore parity and the economy is growing, then you have that. But economy is only growing at 3%. So, and economy cannot grow when you have inflation at 31%. So there are a lot of trade-offs that you need to make. And we're in a particular cycle. So on the long run, hopefully, if they can bring inflation down to like 11 or 9%, then you begin to see growth of 8%, and that is when we will all prosper. So I don't see that happening for another one year.
Well, we're pressed for time, though, but thank you so much for your insight on the news. Tilewa Adebajo, CEO, CFG Advisory. Many thanks for your perspective.
Good evening.